these are not traders coming in. These are buyers that are cash and carry. They're buying a metal, they're having it delivered to them because they understand that the currencies are devaluing and they're ultimately going to devalue to zero. So you either have gold, you either have silver, or you're not going to have wealth when this is all done. Why would you buy a contract that can't deliver? And that's where we're headed, is toward a cash and carry market versus the futures markets that are fraudulent. They're going to be proven fraudulent. That's the bottom line. When they can't deliver, that proves they were a fraud. Danny, they did not have derivatives in Weimar Germany.
Yeah, that's a big.
The difference.
And there was more cash and carry. There wasn't as much credit then either. Mm-hmm. There was credit, but not nearly the amount. I mean, it was like net 30 and 30 days later you got your cash, not net 90 and all this crap. I mean, it's just gotten so distorted.
You're watching Capital Cause, and my name is Danny. It is December 22nd, 2025, and my two guests today. Glad to host on. Couldn't come at a better day, actually. The metals are roaring. Gold and silver are exploding. Platinum's going bonkers. Today we've got Mr. Gold himself, Bill Holter, and I guess I could call you Mr. Silver, Dave. We got Dave Morgan.
All right. Thank you.
Thanks for coming on, guys. Well, let's just dive right into the action here. Bill, I mean, this thing has really taken off a lot faster than a lot of us anticipated. What's your view on this explosion in the metals price seemingly overnight, at least with respect to these gains that we're seeing today?
Yeah, this is, first and foremost, it's important to understand that gold and silver don't change. They don't go up and down. An ounce is an ounce. An ounce today is an ounce 100 years ago and will be an ounce 100 years from now. What's changing are the currencies. And I believe what you're looking at right now is this is the end of the fiat experiment. You're watching currencies devalue. I mean, if you have something go up 100%, it means if you've got silver or gold that goes up 100%, that's a devaluation of 50% of the currency. And that's what you're watching worldwide, is that all currencies worldwide are devaluing. And these are not traders coming in. These are buyers that are cash and carry. They're buying a metal, they're having it delivered to them because they understand that the currencies are devaluing and they're ultimately going to devalue to zero. So you either have gold, you either have silver, or you're not going to have wealth when this is all done.
Yeah. I mean, it seems like people are just wanting to buy this stuff at rapid rate and in view of something big coming down the line here. We were talking off air just now, Dave and Bill, and you typically see this move up in price at the very tail end of a cycle. Dave, are we getting close to that tail end of the cycle, or not? Is this somehow different this time around?
Well, I think what's different is kind of what my main thesis was when I started on the web in 1999, meaning that the money metals would act as money in the, at some point in time. And really, they looked like industrial commodities for most of the year 2000 till recent months. There were some spikes there, but they were short-lived. So, they got out of the box or out of the cage and acted like money, but it was, again, a matter of weeks, and then they were under control again or under management. This time, there's no doubt that the end is nigh, as Bill said. Whether or not we get the 0 point or not remains to be determined. I mean, he's absolutely accurate. I've said for decades, all fiat fails. Three words that really portend the exact reason we're in the metals. However, I really think there'll be some type of a reset before it goes to absolute zero. But that's maybe a side issue. As far as the acceleration, yeah, this looks like what I expect near the end of a bull run. But since we've now switched from it's a commodity to if I don't have it, industry-wise, can't do business without it. So it's not a matter of price. It could be 1,000 of us. Why not be facetious? In many industries, it's not a matter of how much does it cost me. It's going to cost me my business. So I need X amount of ounces. So these businesses are thinking in terms of how many ounces do I need for the next year or 2 years or 3 years? Oh, and what do we look forward? We're going to build out AI centers. We're going to build out this many data centers. We're going to do this much electric car production or whatever. Let's look ahead. Oh, I need our current supply of silver plus 20% going out 3 years or whatever it is. So there's that part of it. On the currency crisis side, as Bill said, it becomes a worldwide phenomenon where all currencies depreciate against a constant. That's that solid ounce of silver, that solid ounce of gold. And just to reiterate what Bill said, when you see that acceleration where it's saying your currency's dropped in half in 1 year, it's a wake-up call. And as harsh as that may sound to the general public that doesn't understand how these fiat systems lose control, they see it in the grocery store. I don't know what the official number is, 17%. I know it's BS because I grocery shop, and I know it's probably, I would say, doubled. Some products have. Point being that people are seeing the emperor with no clothes. The game is over. The jig is up. The finance ministers on high are going to do their best to manipulate interest rates and try to spur something that never works, printing their way out of this thing. And so the currencies are devaluing because game's over, really. I mean, it's not over like tomorrow and everything burns to the ground. But as far as the ability for these guys to gain control back again, it doesn't look like it'll take place.
Yeah, it does seem like they're also setting the stage for just going bonkers with the printing press. A week ago, last week, we got the new CPI numbers, 2.7% year over year, below expectations. But again, I mean, you and I know, and most of the audience knows, like you have to take that CPI number with a grain of salt. They can do all sorts of things to manipulate it down. But the key point is that they're framing it as inflation's under control. It's below expectations, and they're setting the stage for themselves to begin quantitative easing and rate cuts in, I believe, March is when they said the next one would be. And of course, that coincides with the end of Powell's term. And who knows what kind of dove you get in this place. I mean, not that he was that much of a hawk, but relatively more dovish Fed chair in his place. So it really does seem like they're setting the stage to just print, to just devalue the hell out of this currency. Is that an accurate assessment in your view, Bill? Or do you think that they'll let the markets crash, or do you think that they'll just essentially monetize everything?
Well, there's no question they will try to monetize everything. The problem is investors sensing monetization are just going to dump treasuries. I've talked about this several times before, that if you look at the last easing cycle, rates went higher, market rates went higher. And here we are again, they're starting to cut again. And where are rates? Rates are slightly higher than where they cut rates a couple weeks ago. So it's the Fed losing control of the yield curve. And that's a problem. You have to understand that the reason gold and silver have been suppressed for all this time is because the U.S. Treasury had to be able to borrow basically unlimited amounts of money. And that's what this game is all about. There's mathematically, they have to monetize, and mathematically it won't work. The money doesn't exist to pay the debt back and to pay the debt service. So what do they have to do? They've got to print more. And when they print more, that dilutes what's in existence. And they will dilute to oblivion.
Yeah, are we looking towards yield curve control here? Dave, I'll let you take it away, where they will just end up printing the money to buy up their own bonds to bring the yield curve down?
Yeah, more and more they will print to keep the game going. And as far as like another Operation Twist, where they play with the long end and try to get interest rates to be quote unquote normal, yeah, that's a possibility. I've thought about that. So they'll probably try it, but they're at the end of the rope, because no matter how much printing or buying they buy, basically the rest of the world is fed up with our dollar dominance, and that means the buyer of last resort is the Fed. So they are going to print until the market wakes up and says, wait a minute, this currency is worthless. Now, again, I want to be on record that I don't think it's going to absolute zero, but the perception that it's getting there quickly is already in play, and there'll be more and more momentum in that mean. And as that takes hold, you may see much further acceleration than we've already seen in these metals. I mean, for an example, if we doubled this year for round numbers in silver and platinum market, maybe they'll go up threefold next year. I'm not predicting that. I'm just trying to give you the idea of when we hit that panic manic phase. This will look like a light run. When it becomes an all-out sprint, you're really going to see fireworks. And I think we've probably got another year or so to maybe where the new system comes in, the digital euro, the Amero, who knows? I mean, I think I don't know the exact number. I think it's 190 countries in the world, like 163 are making digital currencies. What does that tell you?
Yeah, Bill. I mean, what do you make of all that? I mean, you and I have spoken about the digital currencies coming down the road, but looking at where the metals are today, if you were to allocate more capital, I mean, they've run up a good deal. Is this thing anywhere close to being over, even though have started to go parabolic here in a sense? Bill?
Yeah, you broke up somewhat. I didn't catch the whole question, but yeah, the metals have run big time. But all you have to do is look at a chart. I mean, you could look at you could have been a German in 1920 and said, the price of gold and the price of silver is crazy. But what happened 3 years later? And one thing that very few people are talking about, and people used to talk about quite a bit, was derivatives. The problem with the system today is that everything is financialized, everything is derivatized. And I mean, you're talking about over $2 quadrillion worth of derivatives. And all you have to do is get one market that goes offside, and that'll spill over to all markets. And I have posited for at least 10 years that I thought, because silver is the smallest market and the most suppressed, it's my thought that silver is the fuse to the derivative time bomb. I think silver is going to fail to deliver first. That'll spill over to gold the same day or the next day. And within 72 hours, markets will be completely dysfunctional, if they're even open.
Yeah, I'm looking at the market cap right now of silver. Silver sitting at $3.8 trillion market cap. It just recently overtook Alphabet, Google in the rankings. Number 4 now. Gold is number 1, $31 trillion market cap. And it looks like it's going to be gold number 1, silver number 2, and then all the tech companies right beneath it. Are you starting to see general interest, guys? I'll start off with you, Dave. General interest from the public switching over to gold and silver? Because Dave, you have a subscription newsletter. Bill, you deal with people all the time as a broker. Are you seeing this on the ground, boots on the ground wise? Are you seeing general interest start to shift up for the metals? Or is this price rise primarily consolidated into elite finance, smart money, insiders, etc.?
Yeah, it's both, but primarily it is the retail market's mostly selling back. I mean, I talk with a lot of the major dealers and wholesalers, and they're stocking inventory, and they've got to finance it. I mean, if I have to make a market in the metals, I might have, my bank account might be, I don't know, 5 million, but I've got to buy up 25 million in product. I got to finance that. So I got to buy it and maybe below spot or whatever, but then I still have to finance that. I got to borrow the money from the bank to make that market. And the longer I got to hold that metal on the shelf, the more it costs me. So I'm willing to lower my premiums to move the metal so I don't have the financing charges. So that's one side of the market. The big people, yeah, they're coming in. These are, I never bought gold before, David. What do I do? I don't want to make a rookie mistake. And of course, I set them up. But the insatiable demands coming from India and China primarily, and this is mostly industrial demand, although in Hong Kong, if you look at this King Kong 888, I think it is, Eric Young, he's showing you that a lot of wealthy Asians are coming in and buying, I would say boatloads of silver, but substantial amounts. North America, net sellers, Asia, net buyers, primarily, I would say the industrial side.
What about you, Bill? What are you seeing on your side of the fence there in terms of people's interest in gold and silver?
Yeah, you're definitely seeing selling in North America. Retail is definitely selling. You've seen. I think what you're looking at is the economy is nowhere near as good as the official government statistics. There's no money on the streets, and people are raising money by liquidating metal just to live. Prior to, let's say, 2005, the United States was the game, but now it's the entire world, and the United States is not it's not leading as far as purchasing gold and silver. You're seeing massive demand out of Asia, and Asia, those people are cash and carry. Americans accepted, a contract for this, a contract for that, as good as gold, so to speak. But that's not the case. What we're looking at now is you've got Indians, you've got the Chinese. When they buy, they want the metal, and the problem is you can't print the metal. The metal doesn't exist, and the real short.
Sorry, you broke up there, Bill. What did you say in the last few seconds there?
The real shortage is in silver. I mean, gold is considered money. Silver is not primarily considered money. The demand for silver comes from so many different industries, and it is cash and carry. I mean, you can't put a paper contract into technology. You can't put a paper contract into a medicinal use. It has to be the real metal, and the problem is they can't print it. And that's where the severe shortage is showing right now, and that's where it's going to break, is in silver, not gold. Gold will follow. And if there was no such thing as silver, gold would ultimately break on its own, but silver is going to be the blasting cap.
What do you say there, Dave? Do you see it that way as well? Is the real shortage in silver? And is silver not already blasted through? Is this not the key sign that we've been waiting for, or is there a bigger sign up ahead?
Well, I think the best way to answer that, Danny, is to ask people to go to my YouTube channel, themorganreport.com, and type in the search engine in YouTube. Silver is the Achilles heel of the entire financial system. I did that video more than a decade ago explaining that silver that's going to pull the trigger, not gold, and the reasons therein. So I'm on record at least a decade ago on silver's the key. As far as where we are, to just repeat, I talked about the run to gold before anyone talked about the run to gold. And I said, look, I know it's happening because the smart money is getting in a stealth manner, which was the banks. And they were buying gold at a rapid rate between 24 and 25. And then we started to take off. And I gave the analogy that it starts like a light, a very light walk, then a brisk walk, then a light jog, full jog, a light run, a full run, and an all-out sprint. And that's a metaphor for how fast this market moves to the upside. And as I said before, I think we're in maybe the light run right now, and we're far from the all-out sprint. I don't know if we're far from it. I mean, maybe, we go limit up 4 days in a row and the exchange is closed because, there's chaos. People aren't getting delivery, as Bill indicated, and, game over. I'm not predicting that. What I'm saying is we've got a very volatile market. No one knows how much real demand can be filled by real metal. That's the key, as Bill has said. And so, yeah, I'm in total agreement. And I don't think we have a long ways to go. There's my peer group, many are saying, we got a 10-year bull market in silver from this point on. In theory, we do. But in reality, no, because the financial system needs to be, or the powers that be, powers shouldn't be, want this thing to continue in their paradigm, which means total control with a digital-based cashless society. And they want to move to that before these metals wreak havoc with their current financial system.
What do you think about that, Bill? Do you think that we are this close towards a big blow-off in silver that Dave's kind of alluded to? A lot of people talk about a 10-year time horizon. Dave's talking about something along the lines of a couple of years. Is the end truly that near in your view as well, Bill?
Yeah, I think there's no way to give a date. There's no way to time it. But just the action itself tells you something has definitely changed. There are no big smashes, buyers. What this is all about is and this is something my past partner Jim, who passed away two years ago, consistently said, is that the end game would be a cash and carry market, and the paper game would evaporate. And that's the paper is not sought after. I mean, he talked about $50,000 bid on gold and no one selling, and $10 an ounce offered on the COMEX and nobody buying. Why would you buy a contract that can't deliver? And that's where we're headed, is toward a cash and carry market versus the futures markets that are fraudulent. They're going to be proven fraudulent. That's the bottom line. When they can't deliver, that proves they were a fraud.
Yeah. Well, next question is here for you, Dave. But before we do that, a quick note, guys, hit that like and subscribe. If you're getting value out of this content, and you're enjoying yourself here, remember to hit that like, subscribe down below, comment, let me know your thoughts. It really does go a long way. Dave, you mentioned you could have limit ups in the silver price. Now, if something like that happens, if they close the markets like they did with nickel a couple of years back, what would that imply for the mining stock companies within the silver sector? Does that imply that would carry over to gold and, let's say, platinum as well? Would you start to see investors start to flock into those two metals if the silver sector, the silver market becomes closed? What are some of the spillover effects of something like that occurring? What did we learn from the nickel debacle a couple of years back?
Yeah, well, the late great Jim Dines talked about going in unison at the end times. So yeah, if so okay, so you're a new investor, you're panicking. We're in a panic mode. You call up Bill. Hey, Bill, I want to buy some silver. Bill says, well, I've got some Numi coins. That's it. What do you mean? There's nothing. I don't have anything to sell you. Well, what do you have? Well, I got a little bit of platinum. All right, I'll take it. So all four metals will move in unison at some point, which they're doing right now, as we all know. And then as far as what the miners will do, well, the miners lag because it's the way the stock market works. And stocks are based on earnings. And these stocks are priced like gold's still worth $3,000 the ounce, not $4,400. And the silver stocks are priced as if silver's at 35, not 70. So there's a long ways for these mining stocks to go higher. And then, of course, again, in the panic manic mode, people that are late to the party will look for the cheapest gold and silver stocks they can find. And unfortunately, it's been my very seasoned experience being in this industry for so long that a lot of charlatans will come out with a lot of news pasture and a really great story and a great website and AI clone talking about the merits of this news pasture. And they're going to discover more gold than what's in all of Australia. And people buy it because it's 12 cents. And just the buying pressure will take it to $1.20. And everyone will think they did a wonderful thing, except it was a big lie from the get-go. And I'm sorry to say that about our industry, but it does take place. They're not our industry. Let's just say it's grifters that take advantage of these things. And they do it in all sectors, not just the mining sector, although the mining sector seems to be one of the worst when things really get rolling.
Yeah, Bill, what are your thoughts on what Dave just alluded to there about the prospect of a closure of the markets? What do stackers do at that point? Like if you want to buy more gold or silver, in this case most likely silver, what would you do as a stacker? I mean, if you had like if you wanted to get in on the market. All right, quick break here, because if you're buying gold or silver the normal way, you're probably overpaying by a lot. And that's because most retail dealers quietly tack on these huge markups, sometimes 10%, sometimes 20%, sometimes even 30%. And you don't even notice it. It's like paying $115 for a $100 bill. Doesn't make sense, right? So that's why I've been using the Bullion Standard Pro. It's a membership that basically lets you buy precious metals at real wholesale prices. The same prices that dealers get. So no inflated premiums, no middleman games. Their platform updates every 5 seconds, straight from mints and distributors. So what you see is literally the real market. And here's the crazy part. If you buy something like this gold American Eagle, here's the amount of money you're going to be saving at the time of this recording, at least. So it basically pays for itself multiple folds on many occasions, depending on what you buy. And if you want to try it out, they're hooking up my viewers with an exclusive 10% off their first month. Just use promo code COSM10 at checkout. That's COSM 10 at checkout. So if you're stacking, investing, or just tired of getting hit with hidden markups, check them out now. Bullion Standard Pro. Click on the link down below in the description box and use promo code COSM10. Now let's get back to the video.
Well, if gold and silver are unavailable, markets will be closed. And if markets are closed, you're not going to be able to buy miners. You're not going to be able to buy anything. Banks will be closed, et cetera, et cetera. I would say that we are at the point now, and I warned people for many, many years. I always said, be careful what you wish for. You know, people are talking about $100, $200 silver, $5,000, $10,000 gold. And I always said, be careful what you wish for, because what kind of world are we going to live in under that scenario? The reason you be careful what you wish for is because, as I mentioned, everything is derivatized. You've got massive shorts that were put on for years and years and years to suppress the price. Now those shorts are being broken, and you're going to see dead bodies. And those dead bodies will spread because of counterparty. So, again, let me just say again, be careful what you wish for. You know, are you hoping for $200, $500 silver? Are you hoping for $10,000, $20,000, $50,000 gold? Be careful.
Yeah. Well, once it comes down to that point, Dave, I'm going to pose the same question to you. What do you do as a stacker once they close the markets? I mean, do you have like a plan of action in place or something like that?
Well, I was actually, my thought on that was, limit up for a few days, so a few days closure. But, you have to think outside the box. Could you close the market? So basically what happens is you go to a cash market, like Bill keeps saying. So at that time, the egg market and the milk market used to be in the futures industry. Neither one of those exists in the futures industry anymore, but they both exist on a cash market. So they would go. The problem is what happens if we go to a cash market? Meaning, if, pick a number, silver's at 200, how many people want to turn that silver into fiat? Some will, I would say, but probably not. So you're going to go to a market that's controlled primarily in a free manner between a bid ask, between someone that owns the physical and someone that wants to buy it for something else. Could be barters, like, look, give me this much silver and you can buy my my used car lot. Who knows? But I don't see that happening could happen. I won't rule it out. I think again that powers that shouldn't be are going to do their best to blame it on the speculators, maybe remonetize gold. I'm not sure. Maybe put it in the new system. I agree with what Jim Sinclair said, if I got it right. Bill's right here, but I think they're going to try their new system with a tie to zero, just their good word, and it'll fail, and they'll come back and have to tie the new system to gold. I think Jim's got it right, but I don't know. But he's a pretty clear thinker in my view. I've followed Jim Sinclair since I was a kid. So anyway, that's how I see it.
I see. Well, I want to ask you this then. If you're like a stacker who's like personally, hey, go ahead, Bill.
I just wanted to interject that what we're not talking about and we should be talking about is credit. Yeah, can you hear me?
Yep, go ahead.
Okay. Yeah, what we're not talking about and what we should be talking about is credit. The entire world, the real economy and all financial markets run on credit. Credit is forthcoming as long as there's confidence. And if you have commodity markets that have broken and the contracts have failed and been proven fraudulent, what does that do to confidence? And what would that do to credit? Credit at some point in time is going to shut down. Credit will cease. And that's the end.
Yeah, it would shatter confidence and thereby shatter credit. It would cease to exist, like you said. And credit is the lifeblood of the economy, right?
Of everything. Of everything. Of everything you do. Absolutely everything you do all day long has had a use of credit to put it into existence.
Yeah. So once that shuts off, it's basically pandemonium. I mean, I don't think many people appreciate what you just said, Bill, because once credit is completely out of the picture, then transacting becomes a mission in and of itself. It's not like we take for granted we just tap our credit cards and just like get a bottle of water or something. Once that goes away, I mean, does anyone really still have cash? Carry around cash, let alone gold and silver? I mean, Dave, what do you think about that?
No, I mean, when I first met Bill on the internet, I used to think, God, that guy sounds just like me. But no, he's right. It is. And it's a very fragile system. I mean, it's been robust for a long time. But as the credit cycle tightens, which, of course, now they're trying to loosen it, it's going to work against them. As Bill said, interest rates are going up, even though they're lowering the cost of money at the discount window. The market says better than that. Screw that. I'm not going to give you that kind of interest rate. I need higher because I don't trust the inflation rate. Anyway, back on point. Yeah, it will have to seize up, and it will be, it'll be devastating. As Bill said, be careful what you wish for. Again, I'm not sure we're going to go that far. I won't rule it out, but I think, again, that there'll be an interjection. But, these bankers are so arrogant. They've got so much hubris. They might think that they can just move us to the beta test that's been the Chinese system for over a decade and roll it over Europe and North America. And guess what? It doesn't work. Or perhaps there's a patriot in the software that put a back door in this thing and, makes it fail. Who knows? I mean, we are in very interesting times, and everybody is concerned about their money because the way the system works, it's based on a transaction, commerce between us. Everything has to deal with the currency de jure, where you're in yen or euros or US dollars, doesn't matter. If you don't have money, nothing happens. And if you can't borrow money, which is credit, then things stop. I'm just reiterating what Bill said. But that's a scary thought. Most people don't want to think about it, but it's true. Look at just real quick to go down the rabbit hole a little bit. Look at the normal car dealer. You think all those cars that are on his lot are paid for? No, he's on credit. He's got to borrow money to keep that inventory on there. And every week that goes by or month goes by, he's got to pay the bank or to finance those cars. So it's kind of what I said about the silver market on the wholesale side. So it's a mess, and it's going to continue to be printed away until perhaps the currency fails, meaning we just don't trust this stuff anymore. And the metals are showing us that. We're not trusting this stuff anymore.
The way people try to frame it is, and maybe it's true, maybe it is true, but it's being framed as the bankers losing control of gold and silver. Are they really losing control? Or is this part of, or do they stand to benefit in some weird way from rising gold and silver prices? I'll let Bill answer afterwards. Go ahead.
I'll jump in. I mean, I've said over and over again that the banks have been buying gold hand over fist. There's a reason for that. It's the money of last resort. When all else fails, if you have the lion's share of the gold, they can restart with what's always happened in the past. Fiat fails, go to gold standard. Fiat fails, go to gold standard. So they have that capability. But again, will that be what they want to implement? I say no. They'll try something just digitally first with some kind of meme coin, and I'm not being funny. And if that fails, then they've got the gold to back it up. That's how I see it.
What do you think, Bill? Are they letting gold and silver rise, or are they really losing control? Is this real, or is this part of some plan? Bill?
Yeah, no, I think the powers that be are definitely losing control. If you look at a chart of gold, when did it start rising? It started rising the day after Biden administration sequestered the $300 billion of Russian treasuries
exactly.
that basically were stolen from them. And it became a bandwagon of nations joining the BRICS. And there's no question about it. Their countries are bailing out of treasuries, and they're using those funds to buy gold. And the reason they're doing that is they're looking at their balance sheet and they're saying, oh, well, we're 60, 70% in treasuries. What happens if the treasury market gets smoked? What happens if the U.S. Treasury doesn't like us and takes the treasuries? So what they're doing is they're putting something on their balance sheet that cannot bankrupt. It's the only gold and silver, the only two monies on the planet that cannot default. So they're putting a default free asset on their balance sheet that will be valued much, much, much higher in the event of a treasury default or more treasury confiscations, a break in confidence, whatever. But that's what they're doing, is they're putting gold on their balance sheets because they're gonna need something to fill the black hole that treasuries will become.
Yeah, well, it's definitely shaping up that way. I want to ask you guys this question. Given the recent rise of gold and silver, if you're like a normal stacker, I mean, people who watch this channel already have their own stack of gold and silver, but you're now posed with the dilemma that if you do want to invest more, if you do want to buy in more, you're now having to buy in at these all-time high prices. What do you guys think is the best course of action here? Do you just systematically just keep buying whenever you have capital available? Maybe you look at the mining stocks now for added leverage. Maybe you look at the silver mining stock, because if you look at it from a ratio perspective, silver miners have lagged behind silver as opposed to gold miners and gold. How do you tackle this question? Dave, I'll go to you first. Bill, I'll go to you after Dave. Go ahead, Dave.
Well, first of all, it's an individual choice. So there's some stackers out there that say, okay, I don't know, I'm just going to ride this thing to the top or near the top. And then there's people that are catching on. Maybe they've watched Bill for 3 years but never took action, and now they are motivated. So in those cases, I'd say dollar cost average. If silver goes from 70 to 200 and you don't want to buy it at 70, but you don't have any, you better, because if you don't have metal or real money, who knows how it's going to end. If it ends in the scenarios we've outlined, you're going to be very grateful you have some. So you buy it, over the next 6 months, dollar cost average in. So that'd be for people that are late to the party that need to buy it. On the mining side, I'd say that applies to both. I think you need real metal first before you ever buy a mining share anywhere. But there is leverage in the miners, and the miners are definitely a gift in a way, because they're lagging the current prices in both the metals. So if you do it judiciously, we at the Morgan Report weight the portfolio, have done that for years, survived the big, downturn in the resource sector for, 2011 top till, the last several months back, where we really got going again. But that's an opportunity as well. And there are people that just ignore it all and just say, I'll buy an ETF or whatever, and that's fine, but just realize you're still in the paper paradigm with no, real solid backup plan if things do end badly.
But what if you're already allocated and, you've gotten your paycheck for the month or whatever, and you've got some money to deploy, and both gold and silver are at all-time highs? Is the best opportunity out there, like asymmetry wise? In my view, I would say it's the silver miners right now. Maybe you have a different view. I don't know, but how would you kind of tackle that question? If you don't want to give like a specific answer, what would be kind of the mindset to working out the problem, solving it?
Well, if you're in the sector and you have metal already, then the best place to go is to find the silver miners from top to bottom. You put in, a top tier, a mid tier, and a couple selected juniors that have got, maybe they're mining a small amount and they can expand their mine, or their exploration's fairly well underway and you got a pretty good grip on what the grades are and where they're located jurisdiction wise. So that would be what I would do. As far as, someone new to the party, already outlined.
Yeah. What do you say, Bill? If you're like a regular stacker, someone who's like been buying from you systematically,
let me quote. Let me give you a couple of quotes. One is mine and the other is Richard Russell's. My quote: when people ask me how much should I put into gold and silver, and now especially because of the laws being on the books for the great taking, my standard answer is whatever you don't want to lose. Now, add that on top of Richard Russell's famous quote of, in the end, the winner is going to be who lost the least.
Mm-hmm.
Wow. Very, very profound answer there. So essentially, anything you're not willing to lose, you would. But in terms of like deciding, where do you see the most opportunity right now? If you were to choose between gold, silver, platinum, the mining stocks, where's your eye at right now in terms of asymmetry?
I would continue to definitely overweight silver, just because the ratio, even at, what is it now, 63, 64, down from 120. So from that 120, silver's already double the performance of gold. But I think you're going to see a silver gold ratio, probably 20, 25, maybe lower, who knows. But silver is undervalued to gold. It can't default, just like gold can't default. So I would pick the cheaper, on a relative basis. I would pick the cheaper of the two, and understand that yes, it takes, for big money, you got to have an awful lot of storage space. But for the average person, if you want 100% silver, I don't have a problem with that, because you may end up using it to live on for, 2 weeks, more than a couple months.
Yeah, and of course, guys, nothing we talk about is financial advice. I'm just getting these are just opinions on what Bill and Dave would do if they were in that scenario. So before we wrap up here, guys, I've been asking all of my guests this question as we head on down to 2026, and that is to drop 3 big predictions for the year ahead. So I'm going to start off with you, Dave. What are 3 of the big predictions that you're forecasting that you see heading into the new year?
Well, number one, I think for 2026, you got to be really careful about cyber warfare or cyber attacks. I think that's a meme that's out there that's not discussed often enough, and the vulnerability in the system. Number 2, I think, would be the war, just a big label, because it looks like we are going to escalate, not de-escalate. So that would be number 2. And third would be
war with who? War with who?
Well, all the wars that are there. We got the Ukraine, we've got the Middle East, we've got Europe maybe looking like they're going to war. Maybe Russia's going to expand theirs. We got what's going on in Venezuela, which is pseudo war. So I see war escalation. Let me put it in those terms.
Gotcha.
And third, I think, and this is a little airy-fairy, I guess, but a little bit of consciousness. I mean, I remember a couple of years ago, they asked Bill this question, and he said, it's going to be a lot of truth bombs that will be coming out over the next year. I forget what year he said that, 2024
Right.
or 5. And I would say it aligns with that, but the truth is that we can't trust these SOBs. The breakdown in trust is already accelerating. We got to get back together as human beings. And I think you'll see that. I'll call it consciousness. Use whatever label you want. But, like just going down the rabbit hole a little bit. I mean, one of my good co-parts in Germany said, can you get a hold of Bill Holter? Everybody over here wants to meet Bill. Make sure he brings his cowboy hat. And so I don't know how many years ago that was, but they loved Bill and I. And then we got done with the lecture. We kind of did an impromptu gathering upstairs wherever. And man, those people wouldn't let us go. And one of the main worries at that time was about war and what was going to happen to Europe. So there you go.
Interesting. Well, Bill, I'm going to pose the same question to you. 3 big predictions for 2026.
Yeah, let me just give you, I agree with David, and I think the third one is most important, of confidence. And I think 2026, I think people have pretty much had enough. They know they're being bullshitted about everything, everywhere they look, all the information. It is so hard to get real information now. And I think 2026, confidence is going to break. I think people have had enough. They want truth, and I guess and
Uh-oh, did we lose Bill? Do you hear him, Dave?
No.
I'm not speaking.
Oh, I hear you now. Go ahead.
Yeah, I just ended with the truth will set you free. I think 2026, truth is going to come forth, and I think confidence in many, many areas will break.
I see. Well, that's interesting you mentioned that, Bill. I've been noticing like a pattern with all my guests who I ask this question to. That prediction comes up time and time again, i.e. that there will be like a grand reveal or a great unveiling of the truth. The lies will be revealed, or something to that capacity. I think we all kind of sense it moving up ahead. Each year that passes by has been one, I guess, iteration of an awakening after another. So will 2026 be an even grander one? I guess we'll have to wait and see. But, Gent, it's been a pleasure having you both on. Yeah.
It never mattered in the past.
Yeah.
When we got, think about it. Think about the truth that's come out just in the last week or two. The CDC guy who retired said that they knew it was a death shot. 315,000 ballots in Georgia turned out to be, there's no chain of custody. I mean, people, and it still doesn't matter because markets are still good and everybody's still okay. But there's more and more people that are tuning into we've been fed nothing but bullshit. As soon as the markets roll over, and they will roll over, that's when the truth is going to matter. That's when the truth, when people will care about the truth. They don't care about the truth, or they have not to this point, but they will.
Yeah, they don't have the incentive.
Yeah, that's all part of the break of confidence, in my opinion.
Yeah, I think so too. The biggest question is that will they just pump the markets full of capital just to keep them like in Weimar Germany, the markets in real terms, in gold terms, collapsed, but in their own currency, they actually kept going up. So I mean, who knows how long they can keep the can going down kick the can down the road. I guess we'll have to wait and see. But
they did not have derivatives. They did not have derivatives in Weimar Germany.
Yeah, that's a big.
The difference.
And there was more cash and carry. There wasn't as much credit then either. Mm-hmm. There was credit, but not nearly the amount. I mean, it was like net 30, and 30 days later you got your cash, not net 90 and all this crap. I mean, it's just gotten so distorted.
Yeah, I mean, just look at this. This is the S&P price